Dear valued investors, welcome to Market Insight BRI Manajemen Investasi. In this session, we'll explore the latest market updates and uncover emerging trends to help you make informed investment decisions. United States Zone. The annual inflation rate in the US rose to 2.7% in November, up from 2.6% year-on-year in October. This increase is partly attributed to low base effects from the previous year. The Fed is scheduled to hold a meeting on December 19, during which it is expected to cut the reference rate by 25 basic points. In addition to the Fed meeting, several economic data releases are expected this week. Retail sales in November predicted to increase by 0.5% month-on-month compared to 0.4% in October. Final data on Q3 GDP growth expected to rise by 2.8% annualized, slightly below the 3% annualized growth in Q2. Personal income and spending in November forecasted to grow by 0.4% or 0.5% month-on-month, respectively, compared to 0.6% or 0.4% month-on-month growth in October. China Zone. China's industrial production expanded by 5.4% year-on-year in November 2024, accelerating slightly from October's 5.3% year-on-year growth. China's retail sales rose by 3% year-on-year in November, slowing from 4.8% year-on-year growth recorded in October. Indonesia Zone. Indonesia's consumer confidence rose to 125.9 in November, marking its highest level since April. Retail sales in Indonesia increased by 1.5% year-on-year in October, easing from 4.8% rise in September. The October growth rate represents the slowest pace since January. The November balance of trade data is expected to be released this week, with the surplus projected to record $2.21 billion, slightly down from the $2.47 billion surplus in October. The decline in surplus is attributed to export activity, which is estimated to grow by 4.92% year-on-year. Bank Indonesia is expected to hold meeting this week, during which the benchmark rate may be reduced by 25 basic points. Additionally, loan growth for November is anticipated to reach 11% year-on-year compared to 10.92% year-on-year in October. Market View. Jakarta Composite Index declined by minus 0.79% week-on-week to 7,324.79. The Federal Reserve's decision to cut the benchmark rate is expected to support JCI movements this week, especially as Bank Indonesia is likely to follow with a similar move. The Fed's rate cut could lead to a decrease on the dollar index, providing positive sentiment for the IDR-USD exchange rate, which is likely to further support JCI performance. Foreign investors recorded net selling of 2.07 trillion Indonesian rupiah over the past week, bringing the year-to-date inflow to 19.93 trillion Indonesian rupiah. The three sectors with the steepest declines in return were transportation and logistic, healthcare and financials, which decreased by 3.12%, minus 2.56%, and minus 1.34% respectively on a weekly basis. On December 13, 2024, the yield on a 5-year benchmark government bond, FR0101, remained flat at 6.89%, while the yield on a 10-year benchmark, FR0100, increased to 7.04%. Similarly, the yield on a 15-year benchmark, FR0098, stayed flat at 7.09%, and the yield on a 20-year benchmark, FR0097, remained unchanged at 7.08%. The yield on a 10-year Indon bond rose to 5.12%, while the 10-year U.S. Treasury yield also increased to 4.39% compared to their positions on November 6, 2024, which were 5.02% and 4.15% respectively. Indonesia's risk premium, reflected by the 5-year CDS, climbed to 73.03 basic points. Meanwhile, the rupiah depreciated by 1.02% week-on-week to 16,009 Indonesian rupiah. As of December 11, 2024, foreign ownership in the government bond market was recorded at 873.79 trillion Indonesian rupiah, 14.55% of the total outstanding, a slight decline from its position on November 6, 2024, which stood at 874.38 trillion Indonesian rupiah, 14.55% of the total outstanding. The Fed implemented an expansive monetary policy in 2024 by lowering the benchmark interest rate year-to-date by 75 basic points. U.S. is still on track for a soft landing, as the economy is predicted to grow 2.1% year-on-year in 2024 and 2% year-on-year in 2025. Bank Indonesia is also expected to implement an expansive monetary policy in 2024, which will have a positive impact on Indonesia's economic growth. The bond market is expected to respond positively at first due to the improving macroeconomic condition, which will then be followed by positive performance in the JCI. That concludes today's Market Insight. Stay tuned for more updates and follow us on social media. See you next week in the Market Insight BRI Manajemen Investasi.